with the accounting firm CLA. We work out of our Champaign, Illinois office. Haley spends part of her time in Danville as well. But we both are in our business operations division, which means we are controllers and CFOs on behalf of our clients. So we quite often get involved in budgeting and helping manage finance departments and things like that. So we're here to just spend an hour with you all and present some information that hopefully is helpful, and and then open it up for any of your questions, or please feel free to interrupt along the way. We do have some slides, some visuals to share that we think will help with the presentation, but Haley and I can try to help watch chat questions if you prefer to ask anything that way, or feel free to just interrupt us along the way. Again, I think our visual content probably takes up 40 minutes or so, so there should be plenty of time to stop and respond to some questions along the way. But with that, let me share what I've got. Give me just a moment. Sorry, my Zoom window was not large enough to give me the share screen options. There we go.
You should have, yeah, there we go. Perfect.
Okay. So, again, my background before joining CLA, I've been in public accounting for close to 20 years and spent most of that time operating as a contractual controller or CFO. In the last 6 years since joining CLA, I've been focused almost entirely on nonprofit work. That is a niche that CLA has that is growing, especially in our Champaign and Danville market area. And Haley, did you want to give a little bit of your background as well?
Yeah, I started in public accounting as an auditor, and after 4 years left to go into the private sector. And since I've been in the private sector, I worked exclusively for non-for-profits as a director, controller, and CFO, and have been with CLA now for just over a year. And since being at CLA, all my clients are non-for-profit clients.
Yes. So we spend our time with nonprofits consulting on things like this. So hopefully the information we have to share will be helpful to you all. The disclaimer at the beginning of our slides, this we may distribute this after the session. Don't do anything silly with it unless you specifically talk to us about it, is essentially what this says. I also wanted to share before we got into some of the topic areas that this presentation or a similar form of this presentation is available on our website, claconnect.com. And that's an area where our nonprofit national team puts out a lot of really good resources and blog posts and things like that. Anyone, whether you're a client or not, can sign up to receive that information. So please feel free to check that out if any of this is helpful. What I'd kind of hope to do, and I realize a lot of you have your video off now, I wanted to get some sense from this group on 3 different items. And I thought maybe we could go around the horn. Maybe you could use the chat to give us some of this information. But I was curious to know from the group 3 different things, like what are your primary funding sources? Things that come to mind would be donations, grants, earned revenue through your programs, and about how many staff do you have in your organization, and then what accounting software you use. So I don't know if we should go around the horn, or if can anybody provide any of that information in the chat for this meeting to help guide our decision, and maybe we'll just watch it as we go through the next few slides to try to tailor our comments.
John, I'm happy to call on people if that would be helpful.
That'd be great. I just can't see everyone on the video anymore. Can we get a sampling of that? I have a feeling I know, but would anyone mind sharing, or Joan
Sure.
call out?
Let me start with Kat and Mira. If one of you guys could answer it. John, they're with the same organization, Rising Sprouts.
Okay.
Hi, I'm Catherine. I'm Kat. I think I'm trying to see if Mira's made it on. She has a day job. Oh, yeah, there we go.
Sorry, I joined a couple minutes.
I think a lot of our anticipated revenue, we're still mostly applying to things. The revenue we have is from an award that we got from an incubator program through the university. That was basically as long as we justified what we wanted to, our budget for the upcoming several months, it was no strings attached. So we were very lucky in that sense. And what we're anticipating, I think, is going to come mostly from grants. And Mira's been, I think, slightly more focused on that than I. So I'm going to defer to her for a sec.
Oh yeah, no. We have like 2 grants in the works. So mainly grants. We're focusing more on like the smaller grants of the Lumpkin Foundation at the moment. But I think we're also going to try to
Collaborate.
collaborate with another organization, local organization for one of the larger grants. So kind of combining our efforts with that one.
Okay, thank you for that. Would
Then-
anybody else like to share, or go ahead if you want to continue with the question?
Mira, you guys, you don't really have any paid staff at this point, right?
Oh yeah, we have.
Right. Yeah, we
I
don't.
guess you're both involved with the budgeting process.
Yeah.
Have you made a jump into software yet?
Not a big jump. We've jumped into Mint, so we jumped into software that doesn't cost us anything, and then I think as soon as we are, hopefully a few steps before we need to, we plan to get. We have a little set aside for QuickBooks.
Yeah, we had recommendations about QuickBooks, so that's what we're leaning towards using, but we haven't actually used it yet.
Okay, great.
Mark, you're the next one up on my screen, so what can you tell us?
Right now, we have a couple grants that we've gotten and some donations, but other than that, it's just been us as far as our funding. We don't have any other paid staff other than the founders, and all 3 of us are involved in the budgeting. And then we do have QuickBooks, but we're looking at something different at the moment, but we really haven't dug too far into accounting software.
And
Okay, thank you.
Stephanie, did you want to add anything? John, Stephanie, and Mark are from the same organization, Business Elevator.
I think Mark covered it.
Okay, great, thank you. Jenny? Jenny Paul, are you still there? Well, why don't we move on to Susan Monty then?
Hi, essentially, we get funded through contributions and grants, and we're all volunteer at this point and use Excel spreadsheet. Probably will move to software once we get some more grants and contributions. That in a nutshell is our situation. And I represent and have founded Champaign County Environmental Stewards.
Okay,
And
great.
Susan, as of right now, you're not paid staff for that yet, right?
Correct.
Good, good. Jeanette, you just joined in. Let me put you on the spot right away. We're talking about funding sources for your organization, how many staff in your organization, and in particular, how many involved in your budgeting process, and then what accounting software you use.
Well, I can echo what Susan said. We're all volunteer. We get all of our funding through personal donations. We're just starting to look into some corporate contributions and or grants. And our treasurer is a professional CPA, thank goodness. And right now everything is in Excel, but we'll probably move into a more formal software as necessary.
Great, thank you very much. And then Jenny, were you able to rejoin us? Okay, I think that might take care of it.
Okay. Well, thank you for that. That gives me a good sense that we have some grant funding. We don't have a lot of staff at this point in time across the board in a general sense. Assuming that you may have staff at some point in time, we'll talk about how that factors into this process. That does help Haley and I quite a bit in terms of how we comment on some of this information. Few different things we want to go through today. The bullet list is the 4 different touch, spend a little time in each one of those phases, how to identify who should be involved, and then how to outline an effective plan for utilizing the resources that you have at your disposal. And those resources can be dollars or it can be staff time. Um, it could be anything that helps you achieve your mission. So I'm losing my voice a little bit today. I'm going to carry on as best I can. But Haley and I will pass it back and forth throughout the presentation. So phase one, this is something I talk a lot to our clients about, where you need to begin the budgeting process thinking about resources and not specifically dollars. And so one of the biggest benefits you can get from taking this approach is that you don't immediately start thinking about dollars it will take to achieve a certain step in your plan and then remove that from the plan, assuming that you don't have the dollars to do it. As you'll see later in this presentation, we identify the resources that are needed, whether it's staffing, volunteers, equipment, perhaps, and build the plan for what does it look like to achieve what we want to do in the upcoming year. And then we put those things together and try to get the dollars and cents to work globally rather than department or program by program. So the first step in this is to start your thinking in terms of what resources do I need to achieve this goal. Then the next thing you want to consider is what are the major things on this list that might apply for your organization. Now, larger nonprofit organizations may have everything on this list to think about as they build their plan. If you're more in the startup phase or don't have a lot of staff yet, or things like a strategic plan developed, then some of these may not apply. But each of these areas needs to be considered as we build out our plan for the budget year. So if your organization does have a strategic plan, you would want to make sure that your budget and how you spend your dollars aligns with the mission that's laid out in that plan, and that all the arrows are kind of pointed in the same direction, if that makes sense. Then you can think about budget categories. Programs is another way to say that. Several of you have grants. So if you have a grant proposal, you've already kind of laid out a plan for some revenue and expenses related to that grant. That needs to be built into your budget plan from the very beginning. So this is a concept, or this is a diagram of how your organization may be structured. And it sounds like for many of you, you may at the current point in time be in the top 2 tiers of this. So you may have a couple different program areas, or you may call them departments, but you may not have a large structure funneling up through those where there are multiple programs feeding into a certain department and that department feeds into the whole organization. But it's good to think through this visually as you map out your budget to say, okay, what programs am I doing and what resources are needed for each of those programs? Then we put those pieces together to identify how we achieve that from the top level. So mapping out your structure is an important step. So once we have mapped out our structure, that's when we go into the process of developing our work plans tied to our strategy. So if you have a strategic plan or an involved board that is setting the direction for your organization, that needs to be considered. And now we start developing the work plan for each program area or each grant aligned with that mission. And we advise that we don't get overly detailed at this point in the process. If you think about organizing an outline for a presentation or an outline for any particular project, it would normally start with the organizational strategy and goal, and then you add your bullet points underneath it. So what program activities flow into that organizational strategy? And then what resources need to flow into that program activity to get it done? So some simple bullet point lists to start framing your plan for the year. From there, after you kind of structure it in the bullet points, you can start to supplement that with additional narratives and descriptions of how you'll carry out those programs. And this is the point in time where we want to start thinking about what resources we need to do that work. But in terms of, as listed here, you see we've shown examples of 1.5 full-time employees to achieve project A. And we need to develop a new page on the website, or we need to do weekly travel and build that into our budget. So what are the expenses it's going to take to actually do that activity? Not in dollars. I said expenses, I meant resources. So we need travel, we need people, we need perhaps a web page, we need some equipment. Start to identify what those needs are for that particular area. And then we recommend a no numbers session. So as everyone involved in that particular program comes together to provide input on what those resources are that we need to achieve the mission, have a session to fully vet out what each of these areas needs to, which of these do we need to achieve that missional area. So you have staff, materials, equipment, space, things like that. Put all those pieces together and come up with a comprehensive needs list before we start thinking about the numbers involved with each of these areas. Because the goal is to create a coherent plan for accomplishing the mission and using the most innovative methods and deploying our resources effectively. Those decisions get made once we put all the pieces together and we see where we have maybe a half full-time employee need in one area and we need 1.5 in another area. We might be able to put those two together and fill that with 2 full-time people. So that's the concept at play here. Any questions about the no numbers concept for building your plan out so far? Okay, with that, we'll move into phase 2 and I'll turn it over to Haley, and Haley, you can kind of give me a nod as we need to move
Hey,
the
John, real
slides
quick,
forward.
I think Kat might have a question. She raised her hand on here.
Oh,
Sure, I
yeah.
missed that.
No, I did it. Sorry, at the very last minute. My question is for the bullet point plan. Is that sort of like an action plan where you're just reducing it to?
Yeah, that's essentially saying here's what we
Okay.
want to, here's the program we want to carry out during this budget year, and start adding bullet points as to what would we need to do that work. So forget the dollars, but start bullet pointing what the resources needed are. Okay, Haley, I'll turn it over to you.
Okay. So the next phase is the gaps become your goal. So in this phase, we're going to talk about how you calculate those costs based on the resources you identified in that no number session. Then from there, you determine what funding do you have available. And most likely, unfortunately, there's going to be a difference between the amount of cost you calculated and the available funding. And so from there, you need to figure out how to leverage your revenue and expenses to fill the gap so that your expenses and revenue are as close to the same amount as possible. I'm gonna go to the next slide, John. Oh. And it's just a visualization of what this phase is. So this slide is similar to the slide John went over a couple slides ago, but it includes now those resources identified, for instance, the 1.5 staff, the new web page or page for the website. This is where you start calculating those costs per each resource you identified. And for staff, I know a lot of you said you haven't had paid staff yet, but one thing to keep in mind with staff is not only do you want to calculate what the cost to their actual salary is, you also want to look at benefits. And a lot of times those benefits also include the employer share of payroll taxes such as FICA, and as well as if you determine you're going to offer any kind of health insurance, retirement, or any other type of insurance benefits. You want to make sure you include that cost anytime you project cost out for staff. Okay, John. you can keep clicking till they all show up.
There you go.
Okay, so this is, I think there's one more, John.
There we go.
There we go. So this is starting to look at program specific costs. You also have expenses if you have, for instance, multiple programs or multiple grants, costs that are going to be shared among those program and grants. And then you're going to have what's normally thought of as administrative costs or general costs. And those are, here we call them the core mission support. And those are costs that are needed across all grants and programs you may have. And so even though they're not program specific, they still are very important to the organization. And you also want to make sure you get them part of the budget. So going back into those shared direct costs and administrative costs. So for instance, shared direct costs are still would be considered direct costs to a program or grant, but you might share them across multiple grants and programs. A lot of organizations, this could mean office supplies. So an organization typically doesn't just order paper for its copiers by grant or by program. Normally they'll order in bulk. So then you have to find a way to share those costs across all the programs or grants that use those supplies. Then there's also administrative costs. So this is what's needed to run the organization overall. And this would be like human resources, accounting, IT, and kind of like there's an executive function to the organization. So these costs, these are also costs that need to be budgeted but aren't specific to one program. Okay. And this is just highlighting, John, I think there's a couple graphics to this one too. This is just highlighting. So the columns on the left are called program services. So this is what I would think of if you have a specific activity or grant, all the direct costs related to that program. But you also need to take into account that that program also has costs related to management in general, which again is like your HR, accounting, and IT functions, and fundraising if your organization does fundraising. So when you're looking at a total cost of the program, you have to take into account also those types of costs to determine in total how much that program costs. Okay.
And Haley, I would just add a comment to this that as you're in the earlier startup stages, many of you, it's great if you can find volunteer treasurers and things like that to handle this administrative function early on. But what I've seen happen to organizations before is as they grow and they build out their program areas and their program staff and they expand their reach, perhaps the grant dollars become larger and larger. Because the grants don't, fully fund some of your internal operations or your administrative costs, they tend to shortcut that a little bit. And sometimes that can have a long-term impact where you're not delivering on some of the grant reporting in as good and clean and tight of a manner as they're looking for. And that can sometimes cause problems when you go to renew or extend grants if you're not able to track that data as closely as you should. So it's just something to keep in mind as you grow, not to undercut that central support.
Yep, and I would agree with that, John. Okay, so that was kind of how to calculate costs and how to look at different types of costs. Does anyone have any questions on those before I move into budgeting income and revenue? I don't know if I can see everyone. Okay. So now we're going to look at how to budget revenue and what we also call support and revenue. So you can have contributed support, which sounds like many of you do have, where you have grants from private organizations, individual donations, bequests. Again, they're all money that's donated to the organization. You can also have revenue that's earned. So that would be contract fees. I would say some of the grants that are maybe not from a private organization, other fees for service type contracts. So there's two types of revenue streams to consider when budgeting revenue. And this is just a visualization of that, where you can see each program has its own revenue source in this case, but as well as the general program shows kind of contributions made as well as investment income as another support revenue.
Haley, can I ask a question, please?
Yeah.
So if you get a grant from the state that is based on a fee for service, does that fall in that revenue earned rather than in the support?
Yeah, I would consider that revenue earned because you are having to do certain things to receive that grant money.
Okay, thank you.
Yeah. I guess that would be a good distinction between the two. Is you might get some grants from private organizations that are kind of a little bit more general in what you have to do to get those grants. But I would say, yeah, grants from the states usually come with, there's a specific plan you have to meet in order to receive those funds. So that would be revenue earned.
Is interest income a separate line item other than investment earnings?
You can, I guess it depends on how you want to show it. So you do want to budget for investment earnings. You can call it investment income. The general rule when budgeting kind of any investment activity is you really only want to invest what you actually would earn on the investments, not so much kind of the unrealized market gain. Some organizations I've worked with, they budget investment income based on the amount of distributions they'll think they'll take from investments. But that's the key, is you don't want to get too, you want to be cautious when budgeting investment income. So you don't budget it too high when you don't really know how the market is going to play out over the next year.
Yeah, I think a best practice there is to develop some kind of a long-term, very conservative rate of income on your investments that you can stick with year over year over year. And there will be some years where your investments are down and some years where they're up. But if you budget that conservatively, there should be more years with positive surprises than negative ones. And so that's more of a longer term approach that's hard to peg exactly year to year. But like Haley said, you could have a conservative rate and then determine how much you'll want to draw off those investments each year to fund operations.
Okay, and I think we had a question in the chat about, do you budget in-kind contributions? You do budget in-kind contributions, but then you'll also need to budget the related expense so that the in-kind contribution offsets the in-kind expense to comply with GAAP accounting. Okay, I guess I can go to the next slide and let's.
Did I
Okay.
miss one? Sorry.
No, I think that's,
Okay.
yeah. Revenue, there wasn't as many slides. So this is where we get to the point, you've calculated your cost, you determine what funding you have available, and we're going to assume that your costs are still greater than the revenue you have available. So then you need to look at kind of what are the next steps in your budgeting process. So you want to look at both what you can do differently with revenue and expenses. So for instance, we wouldn't suggest, back to using investment income as an example, oh, we have a deficit, our expenses are more than our revenue. We'll just assume we can make that up with our investments. That's not a very conservative approach, and we'll catch up to you at some point in the budgeting process. But you also want to look at expenses. Or is anything you can cut, anything that you don't necessarily need, or could you do something different that wouldn't cost as much from a budget perspective, but still achieve your strategic plan and goals? And then if you want to go to the next slide. But there's a couple things to consider when you're looking at making changes to your budget assumptions for revenue or expenses. For instance, for revenue, you need to consider if you think you can increase revenue, is it going to cause extra work? And sometimes that does mean then it'll cause extra expenses. Do you have the expertise to pull in that additional revenue? And do you have the infrastructure or resources needed for that additional revenue? Some things to consider when you're looking at reducing your expenses or cost is, does this resource support more than one program or activity? So back to, if you decide to cut some accounting positions, that's obviously going to impact more than just one program. Can the program still sustain with that reduction? Does the costs that you reduce require existing staff to work even harder? And that kind of gets back into, is that a manageable to complete then if you reduce certain costs? How does that work with staff morale? How long can you sustain your staff working at that level if you decide to make a cut that would make them work harder? And then this is getting back to knowing your mission and your organization's goal is, if you decide not to do an activity or reduce costs, does it diminish your organization's reputation?
And Haley, sometimes I've seen that, you know, especially a state or federal grant will require certain outputs,
Yes,
and you may not be able to comply with the grant if you cut too much.
exactly. That is true too, Joan. And I think that's why the no number sessions is really good, because without looking at numbers, you're figuring out what type of resources you need. And then instead of, let's say, for a particular state grant, you think you need 3 FTEs to achieve the outcomes the grant requires you to achieve, then you calculate out the costs and you realize, well, 3 FTEs isn't doable. Well, then I think that becomes more of a, is this grant something we can do, rather than, okay, the grant really only lets us have 1 FTE. We'll go ahead and do the grant with 1 FTE and then risk not being able to achieve the outcomes.
Okay, so now we're at phase 3 where we create a plan. So we've been through our no number sessions to identify our resources. We have put some dollars to what those resources are and looked at revenue and expenses and identified where we have gaps that need to be resolved. And we've taken kind of what I would call a first run, or maybe a first and second run at ideas for changing the expense plan, or changing revenue objectives or something like that, to try to close that gap. So now we're at the point of actually kind of drafting our plan for the budget year. So when we draft the budget, we put all those pieces together and we kind of restate what the work plan is we've been developing in dollars and cents, revenue and expenses. We pull it all together, put it in one view of what does it look like now. So in no part of the budget should be developed in isolation. So it's important that we put all the pieces together first and kind of see where we're at as an organization and identify what we still have left to do from a budgeting process. And that's what the last bullet says: give your teams plenty of time for back and forth, because as we roll it all together and see what the overall picture looks like, there may be a lot of, I consider this almost like the halfway point of budgeting. We put it all together, see what it looks like, and then there's a lot of back and forth left to do. So here's how we go about drafting the plan. So you'll see on the left side of the screen, we list our different programs, the different activities within each program, and the resources we've identified as being needed. And let's say for this example, resource 1 is your staffing costs. And so what we do is we take the staffing costs from each of these activities across all of our program areas, and we roll that up into what our personnel expense line item on our budget will be. So this is a visual of kind of how you take those individual pieces and roll them up into a total. The next step is vet the plan. So we pull the plan together. We want to circulate that against the people that should have input. And most organizations kind of have a multiple step process of this. So we may pull our management team together. It sounds like for a lot of you, it's pulling your 2 or 3 people together, make sure that we agree this is a good plan, and then we advance it to the next step. Maybe that goes to a board of directors, for example. Maybe we at this point need to consider input from other outside advisors or accountants or people we work with as well, to see if they have any input to give. Once we get some initial feedback, we need to adjust the plan. So this is where we take, concerns the board raises. We may get input from some of the people we're serving. Maybe we utilize surveys. Maybe we just utilize conversations with those we are involved in to take that feedback and go back to take another look at our budget. So then approval and beyond. So there are a few things left to do here. So approve the plan, then we go into implement the plan and monitor the plan. And so we'll talk in the next few slides about deciding who decides, how to communicate, and then how to carry it out. So approve the plan, who decides? Where we budget dollars and where you spend money as an organization really matters. And it matters because your dollars need to align with your mission, and you need to get your board, your supporters, and things like that aligned with where you have, spent the largest pieces of your budget. And this is just another, this slide says, are those approving your budget inclusive of and representative of your staff, your clients, and your community? So this is where we, again, wrap in all that feedback we've gotten from different areas to make sure our budget aligns with our mission and what the different stakeholders are expecting from us. Consider other areas like your DEI goals, for example, and then consider not only what committees need to buy in, but who's represented on those committees, and is that a good cross section of the base we're trying to serve? Here's an example of a budget being communicated concisely to stakeholder groups. I think of this as let's roll this together in an easy to understand format to present to our board of directors. So if you'll notice here, the way we've structured this is kind of a best practice, is a limited number of revenue line items and a limited number of expense line items. And then we divide it between programs, admin, and fundraising. One of the reasons for that is the programs may be your grant budgets, admin may be what you need to do to run your organization outside of those grants, and then fundraising are the dollars to try to bring in contributions or additional grants and things like that. This is also the way that your Form 990 will ask you to structure your information, so it's convenient that you structure it in this way for that purpose as well. But a very concise communication, and you'll notice that every line item on this in this format has a letter reference next to it. So that is so we can kind of speak to each line item individually. So here's one recommended format that we use pretty often, is from a revenue standpoint, speaking to your key assumptions is something that's really important. So we assume we can raise this many dollars with this fundraiser. We assume that this grant will renew for another year, for example. We make assumptions like that that drive the revenue piece of our budget. And then the line item narrative on expenses gives the person looking at it a little bit of detail on each line item. How many staff we expect to have, what the change is from last year, personnel expenses, how many people does this represent, things like that. So this is a concise kind of 2-page presentation of a budget financial, and then a kind of a legend or a key explanations document that's very easy for a board member to review and absorb the information. There obviously are different ways of doing this depending on your audience and what they're expecting, but this is a format we like. Then the next step is to implement the plan. So a trap organizations can fall into sometimes as they develop a budget for the year, and that's the end of it. They sometimes they don't circle back to it. They carry out their day to day and assume the results are what they are. And if there's a variance from budget at the end of the year, then well, that's the way things worked out. One of the important things to do is make sure that your budget guides your decisions as you go throughout the year. Because really, your budget, you take all those stakeholders that have given you input and the board of directors that's approved it. The budget is a promise that you, as the people running the organization, are going to carry out that plan for the year. And it kind of creates it should create some restrictions on your program managers and your organization leaders as to what they are approved to do and what they're not approved to do based on what's included in the budget. It definitely reflects your priorities, and it's best to stick with what your plan was. So how do we do that? We need to monitor the plan throughout the year. We talk about the power of budget versus actual. Every one of our clients, that is a standard report they would look at on a month-to-month basis. So we take our annual budget, we break it down into a monthly plan, and then we look at where we're tracking throughout the year in comparison to that budget. If there are variances, we can use that to inform our program adjustments. So one example of that is we're holding a fundraiser, and maybe it's something we sell tickets to or something like that. Well, we know based on the number of tickets sold whether we're going to hit our revenue goal or maybe even exceed it. And if we see that coming, that we're going to exceed our revenue goal, that might allow us to spend more money to put on that fundraiser or expand our catering bill or whatever type of bills there would be associated with that. It can inform that it's okay to exceed budget on expenses because we also have more revenue coming in. Being under budget at the same time could be a problem because that can indicate we aren't allocating enough dollars to a program mission that we planned on carrying out this year. So if we're underspending month after month after month, that may mean we need to put some more focus in that area to make sure we are doing what we said we were going to do. And another concept is resist the temptation to revise your budget too quickly. There are absolutely things that happen 1 month in, 2 months into your fiscal year that set you off track. That's something we can't avoid. But resist the temptation to say we can't hit this, we need to revise, we need to take this to the board, change our plan. There are a lot of ups and downs throughout the year. You need to track it and you need to adapt as you're able to. And one thing that is a good tool to use to do that is something we call a forecast. And a forecast, and the term forecast and budget get used interchangeably a lot, but the way that we think about that is your budget is the plan you set at the beginning of the year. Your forecast is what you now think will happen based on what you know now. So you're comparing your budget to your forecast, which is now informed with what you know partway through the year, and tracking that variance so that you can make decisions accordingly. If you're overspending in an area, you may be able to make decisions to either reduce spending in that particular area or reduce spending somewhere else to compensate for it. Any questions about the monitoring the plan piece of this process?
I was just going to add too, monitoring your plan is also going to help if, for instance, let's say you have a grant and you're over budget, but you're aware of why you're over budget, you try to correct it and you still can't just get within the expenses that were budgeted. You can then use that to see if you can get an increase in the grant for the next year versus, like John said, at the end of the year, you're like, oh, we're over budget. Can we have more money? They're more likely going to respond better to when you tell them, we realize we've been over, these are the steps we tried to take, and we still found we couldn't meet our outcomes within the budget given to us.
The earlier you know, the better
Yep.
it is in
Yep.
general. Okay, so just a recap of the 4 steps in this budgeting process are think in terms of resource. That's your no numbers sessions. Your gaps become your goals. So you put your revenue budgets together. You identify costs related to your resources. If there are gaps, you work on your revenue levers and your expense levers that you can change to try to shore up those gaps. You then roll it all together and create a plan and run that through the approval process and take feedback from each of your stakeholder groups to incorporate as you continue to revise your budget. Then from there, we monitor the plan going forward and make adjustments accordingly. I did want to share some more CLA resources. We do have nonprofit blogs, and there are some articles specific to whole organization budgeting. This presentation was originally put on by Curtis Klotz, who is a nonprofit innovation director at CLA that helps provide our teams with a lot of content. And so you should also find this presentation on our website if you search for whole organization budgeting. But again, there are lots of ways to stay connected and stay in the know on this information. And this screen has the web address to sign up for that nonprofit blog, which again, doesn't cost you anything and you don't have to be a CLA client to do it. And that is all we had. So I'll open it up for any questions anybody may still have left.
Well, thank you very much. It's very interesting information, very helpful. I think even for an organization like the Community Foundation, which is, you know, a little bit larger, we have a little more staff available. And but these are all really good things to remember. I think some of our incubator members are, you know, at the point where we got a pot that money is coming into, so that's the money we can spend. But even the Community Foundation, when we grant money to folks, we want to see at least some sophistication in their accounting system. And it may be just a profit and loss. So we want more than this is the income going in and this is the income going out. So I think this was very helpful. I see that Kat has a question.
Oh, yes. I was going to ask, are there, for those of us, especially who are a little less experienced, are there any particular that you have in terms of keeping track? I mean, obviously, like some of this can be done like in Google Docs or an Excel sheet, and maybe that's your software recommendation. But
We do have technology preferences. Most of the time, QuickBooks Online is a good option for organizations. It's not very expensive. We do have some nonprofit clients that are using a platform called Xero. That's Xero. That is less expensive than QuickBooks. It has similar capabilities for tracking your revenue and expenses and reconciling your accounts. It's not as robust in terms of tracking different program areas, from what I understand. So if you have multiple grants and you need to segregate between those different categories, usually QuickBooks Online using the class feature is a good way to do that. And Haley, I'll certainly open it up if you have other thoughts there.
No, nothing else to add to that.
thank you.
I'll make a comment. First of all, thank you. This was one of the most thorough, coherent presentations I've ever heard. And you know, I think many of us will find ourselves circling back to it and trying to use it to be helpful or whatever. There was at one point you said, do you have the infrastructure you need for increased revenue? And I think that's one that I've harped on with a couple of our incubator members, because I think some of our members have been very successful in getting suddenly more and more grant money and make assumptions based on when they were teeny and starting about infrastructure needs. Like, oh, we've been getting space at free or reduced cost. So I can continue to do that. So I think that particular point is really important as organizations grow to begin to be more realistic about infrastructure costs, whether it's space or HR or accounting or whatever it is. So the other point that I wished you integrated a little bit earlier was the diversity, equity, inclusion goals. I think increasingly everybody is thinking about this, and that needs to be part of our thought process from mission onward.
Yeah, thanks, Wynn. I would agree with that. And if you develop those goals and you're serious about them, then you need to allocate some budget dollars toward them, because there will be decisions you make that take more dollars to carry out the non-financial goals that you have. Well, thank you all for having us. Again, we'll hang out for a few more minutes if anybody else has questions, but appreciate getting to talk to this group.
Yeah, thank you.
Yeah.
Thank you, John
Thank
and
you.
Haley.
Thank
We
you.
appreciate this. I'm going to stop our recording here.